Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFT Perp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. GM. Okay, I guess we can get started right away. Thanks for tuning in, everyone. Welcome to I guess this is the 11th episode of Look at My JPEG. Today we have a very special group of guests with us from Spice Finance. I've been following these guys for a couple months now, and their website hasn't shown a lot of what they do. So I've been digging info on these guys, met them about a month ago, maybe 3-4 weeks ago, in Lisbon. Had a good dinner with these guys, and I'm excited to introduce the Spice Finance team. So why don't we quickly give the guest a quick intro of themselves and what you do at Spice Finance, and we can kind of jump into what you guys do.
I'll go first. I'm the man behind the mask. My name is Shreddy, but I'm here representing Spice as this circle today. But I am the marketing lead, and I run a lot of the community stuff. And I'm just the general vibe manager. Pass it off to whoever's next.
Thank you, guys. I'm Ugwe, one of the co-founders at Spice. Came from a TradFi background, also worked in a few DeFi protocols in the past. Mostly had a lot of the financial product development over at Spice. I'll just pass it off to Shirtless, who can also give a quick intro on what we're actually building at Spice.
I'm a Shirtless founder, aka Shirtless, or you could just call me Dylan. I do biz dev, marketing, as well as internal operations here at Spice. And if I could give a short intro on what we're doing here. So we're effectively building what you can imagine as a yearn finance for NFT lending. So the problem that we're fundamentally trying to solve is a lack of liquidity in the NFT lending space. Now, we're doing something a little bit different because we're not necessarily targeting liquidity mechanistically, but we're really looking for silos within the lender community that we can target in order to bring liquidity in from the outside. So the problem that we see is that in NFT lending, there's just a lot of fragmentation and complication involved in deploying capital to these loans. And this really stems from the fact that these loans are backed by NFTs rather than crypto assets, for example. And so there are a lot of risks involved with NFTs that kind of just that are all stems from like the illiquidity of NFTs. And so the price motion of these NFTs are very volatile. And so it requires a level of sophistication, like financial sophistication, in order to properly deploy capital to these loans. And just the level of financial sophistication that you need kind of prices out a lot of outside capital that may want access to these yields, but don't want to put in the time and effort to do so. And so what we want to do is really just reduce the complications and reduce the barrier to entry in order to gain access to this industry. At a very high level, what our user flow is going to look like is we're going to present users with a series of vaults that are, for example, differentiated by risk, or down the line, even differentiated by the asset that you want to lend against. And then you could just deposit money. We have algorithmic lending strategies that we deploy for each of these vaults. And then, all the lending process, all the liquidation processes are abstracted away for the lender, and we just present you with yield on the back end. Yeah,
Cool.
That's pretty much it.
Yeah. Thank you for giving us the whole picture. Love to unpack a couple of things there. Tell us a little bit more about maybe how you guys got together in the first place. How did you guys meet? What was that origination point that you guys felt a strong conviction towards building what it is today, what Spice Finance is, and we can kind of go through the details one by one from there.
Yeah, so we're most of the founding team, as well as the extended team here at Spice Finance, are we're all friends from high school, and so I guess this is a bit rare because I guess crypto people are often kind of siloed in their interests, and they eventually meet online, but we all ended up being slightly contrarian to, I guess, the typical career path that is led out by most people from our area. We're from the New York, New Jersey area in the US. And so we all kind of took different paths, even though we came from the same high school, but we ended up in the same spot, several years after graduating college. And we had, first a conviction that we wanted to be entrepreneurs, because we just enjoyed the autonomy and then also the challenge of bringing something from 0 to 1. We just thought we weren't contributing enough in, the current 9-to-5 jobs that we were working. And then the second, just a high level conviction in crypto, from a philosophical standpoint, a political standpoint, and an economic standpoint. The idea of just bringing global markets to every different vertical or to every different industry was really appealing to us. So that's kind of how that's how.
Sorry, go ahead.
Oh, my bad. That's how, we ended up in the space initially, but the way that we ended up in NFT finance was just, we all come from a DeFi background, and we just found that we were looking for opportunities elsewhere where we could bridge our DeFi expertise into an industry that was nascent, because we thought that would be the fastest rate of acceleration in terms of what we could do and the value that we could bring. And we just ended up in NFT finance because the thesis of NFTs being the economic or financial primitive of the digital asset economy at large was really appealing to us. So we saw an opportunity here where NFTs, could potentially branch outside of PFPs and arts and collectibles to represent, real world assets on chain, or even financial positions or GameFi assets. And, just applying our financial backgrounds, we saw that, derivatives market on top of NFTs, as well as borrowing, lending, credit markets, these things would be massively valuable. And then also kind of unlock this greater digital economy thesis. So we kind of dove into this space and selected the problem that we thought would, bring the users most value, and then also be the most valuable in, bringing NFT lending and NFT finance to its watershed moment.
Yeah, I love the fact that you guys have known each other for such a long time and found yourself to be in similar situations, looking to solve, a financial, NFT problem, and form that team that way. It sounds relatively organic. Tell us a little bit more. Maybe let's start with the name first. Why Spice Finance? What's the origin? What made you guys choose the name Spice?
Yeah, Spice is nice. Originally, when we were ideating, we wanted to find the most mimetic name possible, something that could be, remembered by our users, also easy to pronounce in that respect, and then also had some kind of historical backing, some reference to maybe some kind of trading markets or credit markets or something of that nature. So we were originally thinking of the name Bazaar, but we thought that Bazaar, would be kind of hard to spell. And then also like it's very close to like bizarre, like something being kind of weird. So we wanted to kind of shy away from that idea, but we really like the idea of, being in like the Silk Road / like spice trading routes and things of that nature. And we thought it could be like a cool idea to, bridge the narrative of, past trading routes and past trading markets into something going into the future. And then, so from there, we just kind of landed on spice because we thought it was simple, easy to remember. And then, the narrative that we wanted to build around it was something kind of akin to the Dune narrative, wherein you still have like the ideas of like creating spice, and then, also that forward-looking sci-fi space type theme as well.
Yeah, no, I like that a lot. And your recent post with NFTFi, I believe that's a meme that you make yourself on PowerPoints. Look a lot like the Dune vibe as well.
Yeah, I think we met we met in person. I was saying that all the memes that we create are on PowerPoint.
Not for long. We're getting this guy.
Comfortable with it.
We're getting this guy a Canva subscription as soon as possible. Although they are incredible memes. I've never seen anybody do.
They are pretty high quality memes. So yeah, I do like the name Spice. It definitely has, it seems like a deeper meaning than what we have NFT Perp, which is quite, I guess, name is suggest itself as quite explanatory. Okay, so
I think that simplicity is beautiful, though. NFT Perp, it's that you're not leaving anything up to the imagination. It's perfect.
Yeah. So when people ask, like, what is NFT Perp? I go, NFT Perps. Okay, thank you for breaking that down for us. Now let's talk about one thing that stood out to me early on is you mentioned that it's all about making the complexity of different protocols and making it easier for capital to be deployed into the NFT lending and borrowing space, and therefore capturing yield. I think when it comes to liquidity fragmentation that you mentioned earlier, when you say that, I think of the sort of the early stage of different AMMs that came about during DeFi summer, 2020, when Uniswap really took off. SushiSwap came in, and a bunch of these different AMMs start popping out, and liquidity was in fact getting fragmented. And I kind of see that on a smaller scale with the current liquidity problem across different NFT lending and borrowing platforms, and with more and more of them launching every couple of weeks, it seems like with all different mechanisms out there, there's not enough that one thing that brings them all together, right? So is that something that you guys are looking to solve current liquidity issue, or are you looking to bring in more liquidity from the outside NFT finance space? Because sometimes it seems like we're in this little echo chamber sometimes. So what are your thoughts on where currently liquidity stands, where they're coming from, where they should be coming from, and how are you making it easier?
Yeah, totally. I think everything you said was pretty much right. Yeah, we're seeing like an NFT lending industry wherein there's like 30 different protocols and new ones coming out every month. I think it's almost a meme in this industry now that new NFT lending protocols are just popping up every so often, backed by like a bunch of different VCs with great brand names. And we're trying to stay on top of it. Some of them are novel in terms of their mechanism design, and some are like kind of repetitions of what have already been pulled out. But yeah, to your point, I think that there are levels of like, let's say, power usage in the industry. They're the power users that are on NFTFi, for example, who constitute both bots and individual lenders. They either lend algorithmically across these P2P loans, or they lend more intuitively just based on their knowledge of the NFT assets. And then there's like another silo of lenders that deploy their capital on P2Pool protocols like BendDAO and things of that nature. And those are probably the two biggest classes of lenders in NFT finance. And then, there's a long tail of lenders that kind of explore the more complex lending protocols such as Sodium or the new ones that are coming out. In our customer discovery process, we actually found that it's less likely that we'll be targeting those lenders, although we do still have a value proposition for power lenders on NFT or BendDAO, for example. But the reason being is just because these power users have already found a way to successfully deploy their capital and earn yield on top of these protocols. And so, integrating into Spice may, break their workflow, or they may not find it as useful as somebody who's on the outside looking to get in. So really, I think our core target users are, you can imagine a ring of liquidity or a ring of lenders or a ring of DeFi yield farmers that are just outside of NFT finance, and they're looking in, but they just haven't developed the lending strategies or put in the effort in order to jump in and earn these yields. And so I think that our core value proposition, or the strongest value proposition for us, is targeting these like credit institutions or degen whales or DeFi like farmers of old who want these yields but don't want to put in any of the effort to do so. So what we do is just provide them vaults, and we aggregate all of these marketplaces as well as the loans on these marketplaces to present to them in like a one-click deposit type manner.
Okay, understood. A lot of things to unpack there. So it sounds like your approach is more catering towards the lenders, right? You're allowing those that have capital, that are looking for yield, a way for them to easily access and deploy strategies. Is that right?
Yeah, that's right.
On the borrower side, have you guys thought about building a easier to in my mind, like, look, I have an NFT and I want to get some liquidity. Are you guys thinking about building like a dashboard where I can get the best LTV, I can get the lowest interest rates, and the less riskier model where I don't get my NFT liquidated?
Yeah. This is something that we're still trying to figure out in our roadmap. So I don't want to promise one way or the other. But I think that value proposition makes sense for borrowers as well. Although technically there are some challenges that are different than the lender side. The lender side, you pretty much just plug and play with regard to the P2Pool protocols, and then build bidding bots for the P2P protocols. But for the borrowers, I think there's a little bit more nuance or technical complication involved in handling the NFT collateral and plugging into these different protocols and handling all of the mechanisms there. But I think that the value proposition makes sense, and it's something we're looking into, but it's not on our immediate go-to-market roadmap. We're just focusing on lenders at this point. Yeah.
Okay. And just to kind of double click on the whole idea, like, do you guys think NFT lending capital creates demands, or do you think the demand side on the borrower side creates supply?
Yeah, I think it's likely a little bit of both. I think our highest level thesis is that the APRs in the space are a bit tough to stomach for borrowers. So although there is like an education aspect that you have to lean into in order to get these like NFT degens to really understand how to unlock liquidity against their collateral, our high level thesis is that in order for, education aside, there is a level of, there is an energy barrier or some kind of barrier for people to borrow against, because the APRs that these loans are settled at are relatively high, going anywhere between 20 to 40% in relatively short amount of time. So the way that we kind of want to alleviate this problem for the borrowers is to bring as much capital into the space as possible. The idea being to increase competition on the lender side, let market forces kind of drive down APRs on both the P2P and P2Pool protocols, and then as such, give or make lending as a value proposition for borrowers something that's just easier to stomach. outside of the education. I think like to kind of answer your question, it's just a little bit of both. We're choosing to, you know, increasing lender competition to drive borrower volume long term.
Yeah, it makes a lot of sense, right? Because the more lender competition comes in, the higher LTV it might, you know, come out of this, and the race to bottom sort of APR on the interest rates could make the loans more attractive for borrowers over time. And, you know, maybe in someday you could see borrowers getting, you know, the low percentile of like, you know, 5%, 7% sort of premiums on these loans, where they can actually get the ETH and put it on Lido, get staked ETH, which is pretty decent return, and put those things on, you know, under the DeFi protocols. And I think there's a good balance on both sides that need to happen. And I'm glad you guys are one of the ones that, you know, are trying to push this.
Yeah, totally. You know, it's quite interesting that the NFT borrowing and lending industry has like existed for this long. That being like a year to a year and a half, with APRs ranging from 20 to 40%. So like maybe an order of magnitude higher than that, where you can find in DeFi. And compression hasn't been you know, that severe since the inception of like NFT collateralized borrowing and lending. And so like this asymmetry is something that we definitely want to tackle. And I think that, you know, just flooding the market with liquidity makes all the mechanisms kind of work better in the industry, and then also may really pop off NFT finance as like a vertical on the whole.
Is there anything you want to touch on in terms of what a first vault or strategy will look like? Give us a Bob and an Alice example.
Yeah. So a lot of our mechanisms here are a bit proprietary. And so we're going to be releasing alpha in terms of like documentation as we go to market. So I don't want to review too much here, but I can kind of give you a rundown about where the information flows. So we've been working with a bunch of NFT appraisal tools in the industry. Some names of these tools are like NFT Bank, Upshot, as well as Spiciest and Nabu as well. And so we take the pricing data from these NFT appraisal tools, and we kind of feed them into a credit risk analysis module where we calculate the expected, you know, value of these loans. From there, we kind of put together a portfolio of loans that we think maximizes yield for a given quantitative level of risk. And then, you know, we present that strategy or that allocation, the distribution for the specific vault that the user wants to deposit money into. And so, for example, in our go-to-market product, there'll be some differentiation or maybe several vaults wherein the levels of risk vary, and then the user can decide what level of risk and what return they would want to you know, input their capital into.
Okay, and are the vaults limited to a number of different collection of NFTs, or do you have like a BOIC specific vault, or how does that work?
Yeah, so if I can jump in here, like so there's going to be like whitelisted collections for the vaults, and users are going to have the ability to see like which collections those vaults are specifically lending against. We have the ability to basically kind of play any which way we want. So if we want to do, let's say, a Yuga Labs specific vault, that's something that we can put together. Or maybe it's just like a individual collection, perhaps like you just have like a Doodles vault. This is something we're exploring for like kind of further down the line, about giving the community the ability to permissionlessly set up new vaults that kind of target specific collections and specific risk levels. That way, you know, if users have like a specific desire to get exposure to like one type of collection, risk level, et cetera, they're able to do that.
Yeah, that sounds interesting. And once users deposit a let's say capital into a vault, and they have expected risk profile. They understand what do the returns look like, and they probably have like a fixed duration in some cases. And where does the settlement layer go? Like right now, you mentioned earlier, Dylan, you talked about NFT-Fi being, sort of the OG right now, and then you have BendDAO, which capture a lot of, seems like the market attention is around BendDAO, a peer-to-pool model, and you guys like Sodium quite a bit, which I do as well. So what does a settlement layer happen? Do you have a vault where you have multiple different settlement layer? Do you have a vault specific for a dedicated, partner you work with that are doing these settlements of these loans? How does that work?
Yeah, so that's probably the last, the last property that you can set up with the vaults. You can choose which settlement layers you want it on. So our initial vault will be a mix of like NFT-Fi, Arcade, BendDAO, and some of the others you had mentioned. And then further down the line, like we can add new settlement layers if we think that they, if we think that they've been audited and the risk levels are low and they're quite attractive. And then we're also able to remove specific settlement layers or execution layers from vaults if that's something we want. And then for like the permissionless vaults that users can set up, they can choose which settlement layers they want to do it on. So if they only want to, let's say, route toward NFT-Fi, that's something that they can do. But if they want to capture, the larger market, which is something we'd probably recommend, they're able to do that as well.
Got it. That's quite interesting. So one thing that I always think that is quite interesting, and it's always an interesting balance of, I call this the ownership of debt. Like if you are providing a P2P loan on NFT-Fi, typically speaking, unless you're with a fund and you have different LPs in that fund that are deploying into a single origination of note, typically speaking, it's very well defined in terms of who owns the collateral and who has debt and what are your expected outcome of premiums. And in the case of a loan default, who gets the collateral? How do you deal with liquidation if you need an auction-based model? So in the case of a vault, let's say you have Bob, Alice, and Charlie both contribute 3 ETH into a vault, and it settles on NFT-Fi. And let's say that borrower doesn't pay back the loan, and you get caught with bad debt, and you have this NFT. Are they just shared to a vault ownership, and those are split evenly with a LP token? How does that work?
Yeah, so that's about right. We're going to be releasing more info on like the liquidation engine for situations where we do get where the vaults get custody of the NFTs. So I'm not going to spill too many details there, but that's about right. Like some of the settlement layers, like BendDAO, for example, like the depositors never get custody of the NFT. It'll just go straight to the secondary market. Other ones like NFT-Fi or Arcade, that's something that we have to kind of build on our end. But at the end of the day, what we are designing is a system that where depositors basically earn yield in ETH. If there are liquidations, whether they be profitable or not profitable, the end result ends up being ETH or stablecoin denominated.
Got it. Yeah, it makes a lot of sense. I think one of the most important thing, and this is something that I'm the first episode we've had on Look at My JPEG was Abacus. And Abacus, I'm still waiting for them to launch. The promise of having a liquid back valuation was very promising. And as lenders, you know exactly what your downside risk is. You can probably purchase like an insurance, like a put option, to make sure you always have value and liquidity in the case of liquidation and bad debt, so you can make your vault contributors whole. So these are something that I'm always interested to learn more about and see how different protocols are tackling these situations. So I guess maybe give us a little light on what are your favorites, as a team, who do you like as the sort of the leading, more mechanically, what makes the most sense to you guys lending and borrowing protocols? Do you like P2P? Do you like P2Pool? Do you like a mixture of two? What do you guys see in the next, I guess, like 6-12 months? Who's going to take the lead?
Yeah, this is definitely a really interesting question. And kind of being aggregators, we basically get front row seats to see, the development in action. I think the answer really is going to be a hybrid system. There are situations where like P2Pool makes a lot more sense for lenders or borrowers more specifically. Whether it is getting that instant liquidity and even like having kind of loans that go into full perpetuity. The APR is something that is a little bit more predictable based on liquidity, right? Like there's kind of a lot of value with the P2Pool system, but as many people are familiar within the NFT finance space, P2Pool doesn't always work. You have to fungify the NFTs, and there's some liquidation that's always looming. And so that's kind of where P2P steps in. So kind of like hybrid systems, our best guess is that the space is going to be quite fragmented between a variety of different systems that accomplish different things for different types of borrowers. And then also within, let's say, a P2P system or even a P2Pool system, there's just different levels of risk that always exists for NFT lenders, which means that there's going to be further fragmentations within those marketplaces. So like a good example of that is, if you're like, let's say there's like a 30% LTV P2Pool and a 60% LTV P2Pool, those two should technically have different interest rates for the borrowers, as well as for the lenders, because there's just a different level of risk that exists there. It's not something that happens in the fungible token space, so that's why that doesn't necessarily exist there. But we think that's probably where you're going to begin to see much more fragmentation. You're going to see the marketplaces move toward basically more customizability on the lender side and more simplicity on the borrower side.
Yeah, and I think something else to note here too is that we started to kind of amend our thesis, at least for the short and medium term, with regards to, let's say, the best mechanism for borrowing and lending and the protocol that will win in the short and medium term. There seems to be a lot of dynamics around like the execution of go-to-market as well as the execution upon visibility of the protocol at large. That I think should probably be factored a little bit more amongst the protocols that are coming out right now. Something that's interesting is that, in our customer discovery process, we found that although many people know NFTFi, like NFTFi.com for the namesake of the industry, of representing the industry, there's like a very severe funnel of people who even understand that P2Pool protocols like BendDAO exist. And then from there, something even way more niche would be something like a hybrid P2P, P2Pool protocol, right? So not only do these protocols coming out have to innovate in terms of like mechanism design for borrowers and lenders, but also, innovates or even like put more emphasis on their go-to-market visibility and then attracting borrowers and lenders, not only from their competitors, but outside as well. Something to think about, especially with regards to, the dynamics of the current incumbents in the space.
Yeah, visibility is, and you can't underestimate the power of network effect. I think this is probably a terrible example, but Ethereum as a layer one, we've all seen the problems with it, the costs being so high, and now we finally move on to the proof of stake model. The cost of transaction is still pretty high, but over the time, Ethereum has built a pretty strong network that so many builders and communities are on it. It's hard to move off of it, even though you have like other L1s that are fundamentally, like in terms of security, decentralization, scalability is better. But we built so much in Ethereum that's hard for us to leave, and I think that's the case for some of these NFT finance user side of things. All right, so I think we've touched quite a bit on the protocol side, the product side, and the team itself. What do we expect as users, lenders, or community members in the next, I suppose, 3 months from your side?
Yeah. So within the next 3 months, we are really going to focus on spreading the visibility of our protocol and engaging with the community. So, be sure to give Spice Finance here a follow as we do giveaways ahead of launches. And then also start leaning a lot into like our Dune narrative building, something that we want to kind of differentiate amongst the other protocols in NFT lending is like a real focus on story building here. And so, look out and follow along with what we have in store for you guys. But also ahead of there, in the next 3 months, we're also going to be launching a private beta ahead of the launch, aka like an early access type of situation. And so be sure to follow us again to keep on top of those announcements and understanding how to get access to the early versions of our protocol to pre-farm these yields.
Cool. I would personally love to try it out. So do give us access. What is the Dune narrative? Tell us a little bit more about the stories on that.
Yeah. So I kind of want to keep this under wraps. I want to make sure that, we control the flow of information here, but to give you guys a little teaser. So we kind of have this, portal narrative that we've been teasing a lot in our Pepe memes that I've been creating on PowerPoint. So the idea here is that, a lot of our story building is going to be kind of centralized around this portal. And the portal is going to give you access to a bunch of these different universes, and the universes being, the communities of other NFT lending protocols that we're aggregating. And so it's an interesting kind of idea wherein we're going to bring in like, the old Spice markets, kind of start leaning into the future, space themes, sci-fi themes, and then have this portal be like the gateway to entry in order to, in NFT lending to bring you wherever you need, bring the liquidity wherever you need.
That's cool. I'm pretty excited. Are you guys? So this is obviously pretty early on, but when token or when NFT collection?
Ooh, got to keep that under wraps for now, my man. But I think we'll follow along. If you follow us early enough and interact with some of our posts, I'm sure all of that will be revealed to you as soon as we can.
Including this one, guys. So make sure you give this space a like, a comment, a share. For NFT Perp, we'll give you guys some of our whitelist spots for private beta in our NFT collection.
Yes, sir. Us as well. We'll be watching the comment section here and who has attended. So be sure to interact.
Yeah. All right. Is there anything else? Let us know how do we follow Spice Finance website, Twitter, or when are you launching a Discord community?
You can follow us on Twitter right now. I will say that expect to see a couple more social media sites soon. I'm not going to say exactly which ones. And we have a landing page, but I would wait for something more spicy to show up. I think you'll be pleasantly surprised. I think Twitter is the best way to find and interact with us at the moment.
Okay. For those that are listening, it is at Spice_Finance to follow these guys. Dylan, Shreddy, and Ugwe, thank you guys so much for coming on to the Look at My JPEG podcast. Really enjoyed our conversation, and we'll hope to talk to you guys pretty soon as well.
Joe, it's been a pleasure. Thank you for having us.
All right. Thank you. Everyone, have a good weekend. See you guys next week. Peace.
Bye-bye.
Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.